The main intent for today is to provide you the real estate investor business setup blueprint. So wherever you're at in your journey, whether you're brand new or you're got some intermediate experience or you're an advanced investor, right? People from all levels of experience have asked me these specific questions. How do I structure my business? What have I done to protect my assets? And then the main reason for it is because some of them have set it up the wrong way and need to go back now, which is extremely costly in regards to how much it costs to fix things as opposed to set it up the right way. Or it's very costly if you don't set up your structure the right way because it increases your liability and your risk, and you come to find out when it's too late. So that's why more intermediate advanced investors have asked my setup. And then beginning investors, or those who don't have their business structure yet, we have a major advantage because you could just learn it, understand it, and then talk to your own professionals, your own attorneys, your own CPAs, your own whoever, your own legal professionals, legal and financial professionals, to decide if this is the right setup for you. All right. So the main intent, how to structure your business, protect your assets, and avoid costly mistakes before they happen. The goal for this training is by the end of it, you will understand what business structure you should build, right? So your org chart and all that, or your LLC structure, which LLCs you actually need and in what order, because people sometimes don't create enough at the start, or they'll do part 1 and not parts 2 and 3 for the setup, or they'll go and they'll spend thousands of dollars on a bunch of random things that someone told them to do, and it made no sense for their business, not with where it's at that point. So which LLCs you actually need, when you need them, how to properly set up your business banking, how to stay compliant with your LLCs and your finances, and how to avoid expensive mistakes later. And I want to leave it with exactly what actions you should take next. What I need from you guys, because I do this stuff all day, every day, it's secondhand for myself and my team, or it's second nature. I understand where is there a gap for you guys so that I can fill in those gaps. So I can actually help you even further with that kind of stuff, if that makes sense. So to start it off, why does this even matter in the first place, right? Like, does any of this stuff even matter in the first place? Like I said, I'm not your CPA, I'm not your attorney, disclaimer, all that good stuff. And my goal isn't that you learn this stuff and you become an attorney or CPA. It's about helping you understand the business infrastructure that supports your investing business. From my experience, those that are newer spend way too much time and money up front trying to set up things that are just being sold to them. Or if you're more experienced, it's easier to fix this stuff early than the most costly, most time-consuming process, which is fixing it when your liability and risk is being tested at the very end, where at least if you identify these issues and you structured it wrong, you can go back and fix it and adjust things as needed. But when it's too late, it's too late. So it's getting ahead of it before it's too late, but it's also later than if you just start off the right way. I don't know if that makes sense, but most investors spend years learning how to buy real estate, but I don't think there's very little information besides, hey, just use this service or whatever, on learning how to actually structure your business that owns it, whether you are active income focused, passive investing, or active investing. My goal is to show you a simple framework that you can follow as well. So the biggest mistake most investors make, like I said, it's way more cost effective and way less risk, way less liability if you set up your business the right way up front rather than later. However, the biggest mistake I see investors make is they just start taking action, which is good, right? Focusing on, if you're going to bird dog or wholesale, finding deals, finding buyers, trying to assign those deals and generate your active income. If you're a buy and hold investor, buying a property, a capital raiser, or like a lender, you're putting your money to work. So they focus on the real estate stuff, which is, okay, let me get the deals. Let me try to sell the deals. Let me have my money and try to lend it out. Let me try to raise money. Let me try to buy deals. They focus on those parts of the business, which is great. However, if you're neglecting setting up your business structure the right way, your ownership organization the right way, your banking, your compliance, your documentation, your asset protection, well, that's a huge mistake. I'm all for taking action, but there's certain things that are a massive benefit to set up the right way, because it's the least cost, least risk way is to do it upfront. If you do it later, it costs more and is more time consuming. If you wait till it's too late, it's the most expensive. If you've already exposed yourself and there's a lot of risk or liability, then it's too late at that point as well. And a lot of things can't just be fixed because you want to fix them later in the future. Like I said, I've seen investors spend thousands fixing ownership mistakes, LLC mistakes, banking mistakes. I've seen people spend tens of thousands of dollars fixing bookkeeping mistakes and partnership mistakes. Setting this up correctly from the very beginning is much easier and cheaper than fixing it later or when it's just already too late. What we're going to learn today, what we're going to talk about today, the business structure that I recommend, which LLCs you actually need, when you need them, because everyone, a lot of new people will go and buy 10 LLCs for some reason up front because someone told them to and whatever. So which ones you need, when you need them, and what sequence, depending on what your actual business is going to do, active income, passive investing, or active investing, different structures for those, how to structure the banking for those businesses, how to stay compliant, and the exact checklist to follow. I'm going to provide you guys that as well as a resource. By the end of the training, my goal is that you should know exactly what entities you need. You should know when you need them. And most importantly, you should be able to walk away and immediately leverage this information right after the training. Whether it is to set up the right way, whether it's to fix things, or whether it is to talk to your own legal representation, your attorneys, your CPA, your financial people, whoever, and see if adjustments need to be made. So like I mentioned, there are 3 core types of investors. Most people fall into one of these 3 buckets. Active income, you're investing in real estate or through real estate for active income, passive investing, or you're an active buy and hold investor. Okay. Funny enough, passive investing and active investing, they're actually treated a little bit differently in taxes than the name sounds for the investment strategy. And I'll talk about that. The good news is whether you're active investing, passive investing, or actively investing, so active income, passive investing, or actively investing, it all has the exact same foundation at the top of your structure. You just need to know the different roadmap depending on which one of those you are, at least right now. So you can always add to it afterwards. So if you're doing real estate investing for the active income, that typically looks like you're wholesaling, right? You're finding deals, putting them under contract, and then selling them to buyers for an active income, for a fee. They buy the deal from you, right? They buy the contract to buy the deal for, let's say, $10,000 of active income. Similarly with bird dogging, you start with the buyer, you find the right types of investment opportunities. When they close on it, you get your money, and that is active income. Some people do consulting, property management, things like that. That's active income. You're typically doing a service and you're generating income. Well, if you're a passive investor, you fall into one of 2 categories. You are either investing as a private money partner, where you're going to co-own the investment with the operator, or you are a private money lender, where you are lending money out to a borrower for an investment, and you're going to get a fixed interest rate return. We're going to talk about the difference between those 2 and actually how the structure depends on if you're doing it for equity, which is more of a passive income producer, owning assets, holding assets is passive income, versus if you are lending money for fixed interest, well, that's actually active income. So it'll be very similar to the active income structure. Or you are the active investor, where you are the one finding the deals, operating them, all that good stuff, whether it's your own money or you're raising money, whether you're paying for a bird dog or a wholesaler, or you are the one finding the deals. Your main business focus is buying and holding assets. And even though that's being an active investor, because you're actively putting in all that work, your actual income from that specific part of your business is passive. Holding assets, long-term holding rentals, it's taxed as a passive business, I guess. And that is important because that's how you want to set up your business, is to match that. When you're a lender, like I said, if you're generating interest rate returns, that is active. When you are getting co-ownership, that is passive because it falls under the similar thing as being an active investor. And active income is purely making active income. You see, I'm going to have to provide visuals so you guys can see all this and how it breaks out and kind of how it all goes together. So it's important to understand this because you can have all your active income all go into one business and your passive investments are different. your ownership of property should be in their own respective LLCs, depending on the structure and the equity of your properties, which we'll talk about. So it's about the foundation that everyone should start with, at least based on my legal representation, my real estate attorneys, and the way my business is set up. At the very top of everything, there is myself, and I have a trust, and my trust is a revocable living trust, and that is my structure. It's me. My trust is the owner of my respective LLCs, my respective businesses, including my holding company LLC and some of my personal assets. I own very little in the grand scheme of things. Most of my ownership is through my holding companies into my trust, and myself or the beneficiaries of the trust get to benefit from that. However, the trust doesn't actually own anything besides my ownership interest in my LLCs, except for a few direct things like, the property that we live in, our cars. It's the beneficiary for our bank accounts and retirement plans and things like that. But it doesn't actually own any real estate property, and it's not generating or receiving the income directly for our real estate businesses. So it's myself with a trust, revocable living trust, plus a will, health directives, and all that other stuff, just the whole trust package. In that trust, then is the owner of my holding company LLC. This is my main business, my holding company LLC, which then has the ownership interest of each of my additional LLCs. Okay? Each of my additional LLCs are going to break into those that are all active income, fall under one thing for the most part. One active income LLC for wholesaling, bird dogging, services, management, whatever. All that active income is owned through one major business, one LLC, which is owned by my holding company. And then my holding company also owns my real estate investment LLCs, my specific property LLCs. All right. And I'll show you what that looks like. But me, I have a revocable living trust. That revocable living trust owns my holding company LLC, or my holding company LLC owner is my trust. This is just for me. It has its own bank account, its own IRS, EIN number, all that stuff. It's got everything. But then it owns my other LLCs for active income and for passive income, so my properties and my passive lending. One thing to note is that your active income LLC can be either just a standard sole proprietorship, like, hey, I'm just the sole owner of this. It basically all just passes through the income up above. But if you're making a certain amount of income every year and you're going to, it might make sense for you to talk to your financial professionals to see if establishing that as a S Corp is actually beneficial for you. I'm not getting into the weeds of that stuff today because it's more advanced. You have to have consistent active income. You're going to have payroll and all these extra things, but there's a ton of benefits for having your active income be treated, or your active income business be treated as an S Corp rather than just a pass-through sole proprietorship LLC. I'm not getting into the weeds of that for this because that's a whole other thing. And then when you set up your living trust, your holding company LLC, you set up those additional LLCs as needed, depending on the business you're going to be doing, active income or passive income, and when you have income about to be generated for that, or you have a property you're going to be acquiring. So I want to highlight, you don't need multiple LLCs today. Technically, you're probably going to start with two LLCs, your trust, your holding company LLC, and then whichever LLC is underneath that, whether it's active income as your focus or your passive income for your next ownership, for your next asset, one of those two. So you don't need multiple LLCs today. You need two. You don't need more than that in the grand scheme of things. And you just need the right foundation. Everything else gets added later as you're acquiring more assets or you're adding more arms to your business. Let's say you're purely buying a property, but then you're going to add active income. Then create that LLC. Or you're purely a wholesaler of bird dog. Your main focus is the active income LLC. We don't need to worry about a passive income LLC, right, to hold assets or anything like that, because you can just set that up when the time is right, when you're actually going to buy the property. All right. This is what you can build literally immediately. Phase one then, to set up your structure the right way, and I'll actually just show you guys a quick visual, although it's not the one I'd prefer to show. I can show you guys a very quick visual of what this looks like. Here's a pretty decent visual, and this is not just me, right? There's my stuff, plus I wanted to put other resources that were utilized to come to this structure. It's not a unique thing to me. I follow what is, I believe, one of the most common structures for this full level of protection as a real estate or business owner. So there's you, your trust, right? So your trust has 100% ownership of your holding company. This may or may not be taxed as an S Corp. This depends on if it's active business or not. Your holding company is then the owner of LLC 1, LLC 2, LLC 3, your different LLCs. These either own like business or active income, hold your ownership of your real estate assets. Although mine is a little bit, actually mine is kind of like this. So my revocable living trust has the full ownership interest of my active income business that is treated as an S Corp. All of my active income, all of it goes into that S Corp LLC. So that LLC, S Corp or not, but that active income LLC, which then covers a lot of my stuff. Because it's an S Corp, I have, a board of advisors, which it covers certain general expenses like healthcare and insurance. It pays for certain services to like my spouse, my kids, for the work that they do. It pays me a salary. It gives me retirement accounts and all that kind of stuff. All right. So I have my revocable living trust with an active income LLC that the revocable living trust is the owner of that active income LLC. In that active income LLC, all my active income goes through there. And then because structured as an S Corp, I also utilize it for even more things like I mentioned. More complicated than the majority of you guys. You don't need to worry about that right now. You just need an active income LLC. Okay, well, my revocable living trust also is the owner of like my 401ks, my IRAs, and that kind of stuff, including the lending that we do, my personal property. And then for my real estate side, it owns my holding company LLC, which then owns my various other property specific LLCs. All right. So it's more like this. My revocable living trust owns my active income LLC, because it could be a single member LLC, or even if it's single member, an S Corp, depending on how much money you're earning. My holding company for my passive income or real estate investments, which owns no properties. It owns literally nothing besides my ownership interest in my variety of LLCs per property. Okay. My holding company LLC is not the owner on title of anything. It owns literally nothing. Well, it owns a little bit of personal assets. Actually, no, my personal assets are owned by my revocable living trust. It owns the ownership interest, whether it's 100% ownership interest of a property, or let's say I'm buying it with a partner, a 50-50 split. It owns my 50% ownership of the property LLC, and the other 50% is by the capital partner, right? They own theirs, I own mine. Holding company is the one that's the owner of that. Hopefully this visual gives you some understanding of my structure, as well as a very common practice to have these ones. So what do you need to build? Well, the first thing you need to build to set this up the right way, your revocable living trust, then your holding company LLC. If it's a straight active income business, you could probably just skip the holding company LLC, talk to your attorney, and just have your active income LLC, and then set up your holding company LLC when it owns your property specific LLCs, the one that owns the ownership interest. That's really the passive income LLC, is the holding company LLC. That passive income LLC, that holding company LLC, is going to be the one to own your individual, the LLCs that own those assets. So get your revocable living trust, if that makes the most sense for you, and set up the LLC that is either your active income or your holding company LLC if you're more focused on passive investments. For example, buying and holding real estate or lending for co-ownership. When you have your holding company LLC set up, you're going to be able to set up all the right documentation, like an operating agreement and all those other things that we'll talk about shortly. Plus, you're going to have the documentation that you need to set up what is known as an EIN with the IRS. It's basically your business's social security number or whatever. It tells the IRS this code, this EIN, this, I want to say like employer identification number, EIN, is like your social for your business for tax purposes with the IRS. When you have that EIN, then you can set up your business banking account. You don't need a trust to set up your holding company LLC, but to have your holding company LLC be owned by your trust, you need to have your trust to actually name it, right? To name that as the owner. You could always go back and adjust the ownership of the holding company LLC. So it's not the end of the world if you wait, but you need your holding company LLC and the documentation that comes from setting it up to be able to get your EIN from the IRS. Could be done for free, or there's services that do it for you while setting up your LLC. And then you can use that to then set up your business bank account. So then you can actually fund your business and have all the money flowing through the business, not your personal finances. If you have that set up, you're already ahead of the majority of investors, and you may not need to set up anything else, at least not yet. Like I said, if you do nothing else after this training, just do this. Create your trust, or at least evaluate this process with your attorney, whoever, or if you need referrals, just let me know. Create your trust, create your holding company LLC or your active income LLC. So your passive holding company LLC or your active income LLC. Get your EIN from that LLC and the other documentation to set up your business bank account. As I mentioned, at that point, you're basically done and you do not need to set up another LLC, at least not right away. The goal here is I want to simplify this because many investors make this way more complicated than it needs to, and that either prevents them from just starting or they overcomplicate it and they spend way more time and money on things they don't need right away because someone sold them something for that. Or they go about taking the action and then it's a lot more costly and more difficult to then fix it after the fact. So that's why I'm trying to simplify it for you guys as much as possible. So your business setup timeline. Another big mistake I see is people are creating entities that they don't need yet. Like I said, you're just creating ownership. You're creating LLCs, right? You're creating businesses that you don't need yet. And you're spending time and money, not just to set it up, but there's ongoing costs involved with that. Your business can and should grow as your activities grow. Choose your lane and then focus on the LLC setup that makes the most sense for that, passive or active. Have the foundation built correctly from the very beginning, and then add the next LLC when the activity begins. So if, like I said, if you're doing active investing and you want to buy, or you're doing active income wholesaling and you want to buy a deal, great. Now create your holding company, your passive holding company LLC for your real estate ownership. If you're purely buying real estate and you get a property management fee, acquisition fees, or you decide to wholesale or bird dog a deal, great. Now create your active income LLC because now you have that active income being generated as well. You don't need to do it all right away. You do it when you need to. That helps you keep your costs down. It keeps compliance simple and just makes it easier than keeping track of everything. It's not just the costs up front, it's all the ongoing costs as well. For registered agents, for annual compliance, there's just more to do. It helps prevent unnecessary complexity is the overall goal. So which LLCs do you actually need, right? Well, I've already hit on this a bunch of times. I'm just going to reaffirm it. Everyone should have the structure of trust and holding company. And then you decide, are you going to have an active income LLC, a passive income LLC? Which one of those is the one that you need more of? Are you going to be buying properties or are you going to be generating active income? Then you could just add on to that. You can add another LLC when you have the other income source coming in, whether it's passive income from owning assets or active income from doing active services or lending for a fixed interest rate return as a primary lender. And then so when should you create the next LLC? As I mentioned, it's very simple. Create the one that you're going to use right away, whether it's active or passive, and then create the next one if and when you have another income source that is different than the one you set up. If you set up active income LLC because you're wholesaling, consulting, and property management, lending for a fixed interest rate return, fine, that's your active income LLC. Well, if you want to go and buy and hold a property, you're going to need the passive income LLC, right? The holding company LLC. Great, create that. You're actually going to have a property specific ownership LLC as well. We'll talk about that. Or if you're starting with buying real estate and you have that active income being generated, great. Now create that active income LLC. All right. The goal is to do it as close to when you actually need it and then just decide in the very beginning, which one are you going to focus more on? When you have additional income that differs from the way that your existing LLC is set up, great. Well, then just now execute on that one. The one big one I want to explain and visually show right now is, let's say you have your trust and either your active income or your holding company, right? You have one of these. I'm going to buy and hold real estate or lend as a equity partner, as a co-owner, that falls here. Or active income, whether it's wholesaling, bird dogging, property management, or lending for fixed interest, that's here. Okay. You don't need to do anything else for active income. All your active income can fall under this business. You might consider separating active income sources to minimize the liability between this service and that service. However, I mean, that's ultimately up to you and your attorney if that makes sense. This shouldn't really own anything. So your liability is always fairly limited in that regards. For your real estate business, your buy and hold business, you have the holding company that doesn't actually own anything. It just owns the ownership interest of your property specific LLCs. So LLC A that owns property A, LLC B that owns property B, LLC C that owns property C. Okay. Or you can have LLC A that owns property A, B, and C. Okay, you can have that. If you're the sole owner, the properties are owned in the same states, it's very easy to just have one LLC that then owns each of these properties, but there's guidance for that, right? Like I said, if it's different states, you probably don't want to do that. If there's too much equity in the deals, you probably don't want to do that. If there's different ownership structure, right? You have a partner or a different partner, you don't want to do that. You want to have separate LLCs for the properties. Just like this. There are two options. This is our preferred route. I will touch on this, but this is our preferred route. So let's say you're buying a property, you're creating your LLC for that property, which is this LLC is owned by your holding company, LLC, your passive income LLC, owns LLC A because LLC A is going to buy property A. Okay, well, LLC A is actually not just owned by you. You're going to raise money for the deal. Well, if you're going to raise money and split ownership, there's two ways to do that. Either your holding company and your capital partner LLC, right? Your cap partner, their LLC, and your LLC, both are owners of LLC A, where you're breaking down the ownership interest per partner, and that's done through the operating agreement. And I'll talk about each of the documents that comes with creating an LLC, plus the ones you need to create specifically and customize for your business. But your LLC A is actually owned by you and your capital partner. You both own that new LLC, which then is the one that is the owner of property A. LLC A is the one on title. If it's just you owning it, you're self-funding it, no capital partners, or they're just a lender, not a co-owner, right? They're not an actual owner of the property. They're just a lender on the property. Well, you would not have this. You would own LLC A outright, and then that LLC A would own this property. That'd be this structure. When there's a capital partner, that's when this becomes important. Or your holding company can be the owner of another one of your holding companies. That holding company is on title, right? You don't want your holding company on title. You want this additional property holding company on title. Your capital partner's LLC is on title. So instead of LLC A being the one on title, the owner on title, and you guys are owners of LLC A, you are both just directly on title, and you guys are both directly listed as the owners on title of property A, and your agreement between you two is a joint venture agreement or whatever other structure you want, typically a joint venture agreement where you're both on title already, and you have a joint venture agreement outlining everyone's contributions, roles, responsibilities, right? What everyone's bringing to the table. How do you deal with things that will arise? That kind of stuff. Your JV agreement and your operating agreement will be fairly similar. The big difference here is either your LLC that you guys are co-owners of is directly the one on title for the property that you bought, or your holding company, your second holding company, not the main one, your second holding company and your capital partner LLC are both on title for this property, and that relationship is documented through a joint venture agreement. All right, those are kind of the two structures. This is the most common for co-ownership. If it's a lender, it's just this, and they're just added as a lender, as a loan, as a lien on the property, recorded to the property itself. Here's how this evolves and gets a little bit more complicated, right? And then I'm going to go back to the core training. Your holding company LLC, right? Back to this which is owned by a Rocco Living Trust. If you own the property and that's it, great. You own the LLC outright that owns the property, great. If you have a capital partner, your holding company, LLCA, which is also owned by Capital Partner LLC, and that's the LLC on title for the property. Well, let's say you want to do more deals with more capital partners. Okay, great. Create a new LLC each time you buy a property, and the title LLC owners are your holding company and capital partner LLCs. So for example, I'm going to buy with capital partner 1 or capital partner A, we'll say. They're going to bring the funds and do some of the active work. I'm going to find the deal and do some of the active work. We're going to own LLC A, which owns property A with a 50-50 split. Okay, so we create a new LLC that is then the owner of property A. Well, if we decide to buy another property in the same market with the same ownership structure, we can actually just use this same LLC between capital partner, we're going to say A now, and our holding company, right? This same LLC that we own, we want to buy another property with the same terms, then we can have property C have LLC A on title. So that's doing multiple with one partner, right? With the same structure. Well, if we have a different partner on a deal or it's in a different market, well, cap partner B in this example, 2 or B, my holding company is going to partner with cap partner B LLC by creating a new LLC that we are the owners of, right? That you are the owner of 50% and your cap partner B is an owner of 50%. And this LLC, LLC B, is the one on title for property B. But does that make sense? If not, I need to understand. You don't need any of this, is what I'm trying to tell you. You don't need literally any of this right now. This is as you're adding more properties. And if you're raising the money and splitting ownership and things like that, that's when you might need this. You might only ever do this one time and this is all you need. You don't need to worry about multiple different partners and whatever. Or you might be self-funding the deals and you don't need a bunch of LLCs that assign ownership interest to you and different capital partners. You just need this and either this one or this one, your holding company or passive income. And it's a holding company because all it does is hold your ownership interest, not assets. All it does is hold assets for your passive income business, your real estate investing ownership business, or your active income LLC. You need one of these. And when you acquire a property or about to, then you create the subsequent LLC here. So if you're just doing this, great, just do this. If you're just doing this right now, great, do this, and then set up your LLC for the property when the time is right and you know what the structure is going to be. Because you might decide that you're going to raise money for the deal and give up ownership. Great. Well, if you set this up wrong from the beginning because you did it prematurely, well, that's an issue, right? You just wasted money and time on an LLC that you won't be using for that. Versus if you set it up when it comes time, like when it's the right time, then that's when you do it. Those slides should have answered the most common questions I get asked. Like literally, it's one of the most common questions, regardless of experience, knowledge, whatever. That's one of the most common questions I get asked all the time. Is this structure set up? Whether it's at the very beginning, or they're trying to go back and correct things, or they're trying to set it up for partnership opportunities, or they're active and they're wholesaling and now they want to buy, or they're buying and they want to do active income, whatever. Which LLC do I need? The answer depends on what you're actually doing. Said, if you're generating active income, you need an active income LLC underneath the structure of the trust and the holding company, right? Or the trust that owns your holding company, whichever. You can have trust holding company that then owns real estate holding company and active income, or trust holding company for your passive investments and active income. But your trust, and then at least one LLC. So you can set up your bank, you can set up all that kind of stuff. Just choose which one of those makes the most sense for you. If you're investing passively, or you are buying you're buying properties or lending for co-ownership, they need the passive income LLC, and you'll need a property specific LLC, right? You have the holding company passive income LLC that then owns your property specific ownership LLC. But the foundations stay the same. It just, the next layer changes depending on what you're trying to do. When do you create the next LLC? Well, that's super easy, right? I'm not telling you to create these today like most people are because they get commissions when they tell you to do stuff like that. I don't care. I'm trying to help you guys set it up and be efficient with your time and money and the complexity of the business you're setting up. So create your LLCs when the activity begins. So if you're going to start wholesaling or bird dogging, great time to create your active income LLC. Or you can wait a little bit until you have a deal under contract, or you're about to get a deal under contract and you assign it to someone, like before you actually generate the income. However, you're creating complexity when you do that, because now your expenses, where are they coming from? Your own personal. When you need to put that deal under contract, what are you putting? Well, your personal name. So you have an LLC to put under contract. If you wait too late to the time you need to use your LLC, you're just adding unnecessary complexity, where if you know you're going to be wholesaling or bird dogging your active income, create that LLC right away. That'll make it easier when it's time to put that deal under contract with your LLC, not your personal name. Have your bank account set up immediately, so then all your money is flowing through your business, not through your personal finances. And then similarly for the buying LLC, create your holding company LLC right away for the buying assets. You don't need to create necessarily the specific property ownership LLCs until you're much closer to putting a deal under contract, or you put it under contract under your holding company LLC and then sign an addendum to change the buyer from your holding company LLC to the new property specific LLC. That's complicated. Yeah, because I'm talking a little bit more advanced for my more advanced investors out there. One thing that we talked about that has questions typically is, why even have this setup? Different LLCs that own different properties instead of just putting them all under one. Well, some of the reasons for that, there's a variety of reasons, and I'm not the end all be all on this. However, most people think it's only about liability protection. So separating your investments. So if there's something that goes wrong, a lawsuit or whatever in one, you're protecting the other assets within your other businesses. That's true. However, that's not it. It's about organization. It's about easier to understand your property performance, easier to work with partners. You actually need to do that if you're going to have different ownership structures, or you're not going to be the sole owner of that business. It's much easier to sell a property when it's own LLC as opposed to it being combined with a lot of other properties or a lot of partners. It's easier to finance the property, whether it's upfront or do a refinance later. It's easier and better to keep your bookkeeping clean, your finances clean, and asset protection matters. Absolutely. It's a big part of this. However, the operational clarity matters too. So why do experienced investors separate their properties? Well, yes, better asset protection, but also better operational clarity because you have cleaner bookkeeping, easier partner management, easier property sales, easier financing, better performance tracking. The goal is not just to create a bunch of LLCs for the sake of it. The goal is to create a better organization so that each LLC has a purpose and is providing the asset protection that you're looking for, but also keeps the operations of your business successful. Yeah, that's a big part of it, because you can have every single property owned by a different LLC for the asset protection. But if your finances aren't straight and your bookkeeping isn't straight and you're commingling funds and you're not handling your compliance and all those things accurately for your LLC, well, that theoretical asset protection could be pierced. It's called piercing the corporate veil. So if you go into a lawsuit and you're saying, hey, this, I separated all my LLCs, every property is its own LLC. I mean, you're not going to say that, right? But each property owned is in its own LLC, but you're commingling funds between your accounts, or you have personal money coming in and out, or you have different business money coming in and out, or your bookkeeping's messy. It could create additional exposure that defeats the purpose of your asset protection. So the financial clarity is just as important, and the financial management and the operational management is just as important as the asset protection, because you might create all these LLCs for asset protection, but if your business finances aren't done well, then it's going to pierce the corporate veil anyway. So you need to set up the different LLCs for your different properties that own the properties, but you also need to operate them correctly so that you're not defeating the whole purpose of that better asset protection. All right, so we're going to talk about the business setup checklist that I'm going to be providing to you guys for free in the Real Estate Freedom community, literally a step-by-step checklist and resources on how to get a lot of this stuff done. But this is the actual setup process. I think most people overcomplicate this. What you got to do, choose a business name, right? You got to create your LLC. We're saying you already have a trust, and now we're setting up the LLC, right? Well, choose your business name. Then you create that LLC. There are service providers that will do all that for you. They'll do literally all of it. Get your operating agreement in place. What is the intent, purpose of your business? What are the initial contributions? What are the plans for if things go sideways? What are the distributions? What are the roles and responsibilities? What is the ownership structure, right? That's your operating agreement. When you have your LLC and the formation documents from that, you can get your EIN, your employee identification number, through the IRS. You can do that yourself for free. You can pay I think it's like $50 to $200 fee, depending on who you're utilizing, to get your EIN when they're creating your LLC. When you're setting up your LLC, one of the things you want to do is also have a registered agent. That registered agent is going to be the person that is listed on the various online databases and whatever as the primary point of contact for your LLC. You don't want your own name, your own addresses, your own things on public display for your LLCs. Well, having a registered agent, that's literally the intent of it. They give you a person that is not you to when they're setting stuff up, but also for the ongoing, what is the public information, the addresses, the contact information is not you, it's the registered agent. That's going to happen if you're using a service provider to set up your LLC, or you can just hire for the registered agent, because a lot of LLC requirements require an LLC to have a registered agent that is physically located in that state. I would assume the majority of states require that, but I definitely know some states definitely do make that mandatory. And then once you have your LLC set up, your documentation, your EIN, then you can open your business banking, and I'll show you what that process is roughly going to look like. So choose your business name, leverage a service provider to create your LLC, where you're also going to get your registered agent, create the operating agreement for that LLC. Once again, these service providers can do that for you. Get your EIN, and then set up your business banking account. That's kind of the 5 to 6 steps, I guess you could think of. Obviously, each of those steps has sub-steps, but that's the gist of that. All right, so operating agreements and registered agents. If there are two things investors consistently overlook, in my opinion, it's this. It's the operating agreement, which is literally breaks down every single key piece of information for your LLC, for the properties that it's going to own. It defines your ownership structure, voting rights, if it's a manager-managed LLC, if there's profit splits, capital contributions up front, if you're going to use this LLC to buy multiple properties, a single property, if there's additional capital contributions that are needed, how you would handle exits for the property, if there's a refinance, a sale, the partner wants to move on, if someone passes away, all of that stuff. That's the operating agreement for your LLC. That is one that I see people overlook because all they do is utilize a generic one, which is fine because there's no real, they're going to give you all the basic information that you need on a generic one to have an operating agreement. Well, that's not why you set up an operating agreement. It's not just to have one because you need one, but it's to set one up that is approved and signed by you and your partners, especially capital partners or business partners, so that you guys know how do you handle things when tension or stress might be high, or like you need more money for the business, or one partner wants to move on, or one partner passes away, or whatever, right? You don't want to deal with those things in real time when you can address those things up front. That's the operating agreement. Next is the registered agent. A registered agent is all for the sake of privacy and compliance. You can literally pay, I think like $20, $30 a year. Some places charge a couple bucks a month, $10 a month, $15 a month. I've seen it vary between like $30 to $200 a year, roughly, depending on if you're paying it all up front, if it's monthly, and who you're utilizing for that service. But either way, it's one of the most important things because it provides you that privacy that you're looking for. When you utilize a entity, right, a company to create your LLC, to have your registered agent, it's also going to provide you compliance reminders. LLCs are not just set it and forget it. Well, you set it and then you have to do, some states require annual compliance. You have to do certain things. You have to submit something to the state talking about how much assets you own or how much income this business has generated, or just submit very basic information. They can do that stuff for you. It helps protect you, provides that privacy for that public records. When I go right now and look up, I think if I look it up, I'll just destroy the ability to post this on, later. But if I go to Wyoming, I go to something like Wyoming LLC search and I type in business, whatever. and I go to any one of these that's good and compliant. So every LLC is easily searchable on that state, right? Okay, and I'm going to go to this one. That one's revoked, dissolved, withdrawn. Actually, there's an active one. Excellent. So I go here and it'll tell me when the LLC was set up, what it is, when it was filed, right? Obviously the state, the standing of it. When you go to additional details, it's going to tell you they have a registered agent. So I don't know who is the owner of this LLC, right? There might be things that they messed up to know, but I don't know because they have a registered agent that's providing them anonymity. So that's showing you here. This could be their actual address. So I can Google this and see, like, maybe this is those people, or maybe not. I don't know. Maybe it's another office they have. Maybe it's like a PO box. Maybe it's a registered agent in the state of Maryland. I don't know, right? But if this was someone's home address and I Google it, well, it'd be very easy to know who that person is. Then tie that into that person being the owner. Well, your registered agent could be these addresses for you. When you have the initial filing, and I don't know if I can share this. Oh, yeah. And it says principal office, right? That's where the information is coming from, what was previously put in. Organizer, is this them? Is this a company? Who is this? Well, I can look at this information, know who this is. They probably added the registered agent too late, or they didn't use them for all the services, which could have protected them here because their information would not have been there at all. Based on this name, this probably, I don't know what this is, but yeah. Public notes, the parties involved. So it'll show this stuff. So all I did was I went to Wyoming. I just typed in the word business, right? Wyoming LLC search business, just because whatever, just the name of LLCs. Went to one that was active. And I was just looking through the details. And yes, they do have, or this one's, they do have a registered agent, right? It says registered agent, but this principal office and mailing address is different than the registered agent. If I Google this, it might be their home address. It might be their other business address. It might have limited their privacy because if I can find that it's their home address or whatever, then I know who the homeowner is, right? Like I can pierce the corporate veil. I can quickly and easily understand who the owner is. They lost the anonymity because they probably didn't set this up the right way from the very beginning, or they didn't utilize a registered agent to be this information. Same with history. I can literally click, these are their documents. And when they do their annual compliance, they're the ones personally doing it. Well, that's going to, even if they set it up the right way, if they're the ones doing the ongoing compliance, their name or their contact information is going to be the one listed there. So when I pull it up, their LLC, their formation documents, their articles of organization, it has mailing address, principal office address, organizer. All of this stuff should just be your registered agent. All of this to provide you the pure anonymity. They might have done something else. I don't know, but you see that if they're the ones signing it, if they're the ones, it's their business or it's their house or whatever, well, that's really limiting their privacy in that context. So why have an operating agreement? It breaks down and defines the key components of your business: ownership structure, voting rights, profit splits, capital contributions, and importantly, exit procedures. The registered agent provides you that privacy from your information being publicly recorded, provides you that protection and the privacy. And if you're utilizing a service, they're going to provide those compliance reminders. Hey, it's time to do your annual compliance. And you get professional representation, which is nice as well. Next time we'll talk about is business banking rules. I think I have enough based on the feedback that I've seen to know what you guys do and don't need and the level of complexity that you need. I'll probably go way more complex for my super investors and even the co-living freedom community because they're buying. We just spoke with someone today who just bought their second deal after joining. So, they're already at the point where that's the necessity for them. For a lot of you guys, active income, you're investing as a capital partner. Maybe you're trying to learn how to set up the first one. I'll keep it extremely simple for you guys and just say, here's the resources that can do it all for you instead. And then we'll talk about business banking rules, why it's important to protect your anonymity and not pierce the corporate veil, the way you set up your banking, how to set it up for your holding company or your active income business, what banking platform I utilize and why specifically, and then the ongoing compliance needed for your LLCs, plus basically the easy button to get all this stuff done for you. And then I'll provide the business setup checklist, which is set up your foundation. If you're going active income, here's what you need to do. Here's the resources for that. property ownership, compliance, all that kind of stuff. But the big takeaway is build the foundation of your business first. Build your revocable living trust that is the owner of your holding company or your active income business. And then build off of that as you need to. Get your banking set up. If it needs to, your holding company needs to own another property specific LLC, great. That's when you add those things as you need to. I'll provide it to all you guys, the simplified version in Real Estate Freedom Community for free. Just go for it. Use these resources to help you out. And then for CoLiving Freedom Community and super investors, I'll do probably a more advanced one for you guys because most people are focused on starting, not actually owning or owning multiple or especially scaling. And that's a whole other level of complexity, raising capital, multiple businesses, multiple properties, different partners, all that kind of stuff. So if you don't have that, go to the free Real Estate Freedom Community and you will see that be added in there for you guys as part of the Start Here training section. Thank you guys. Appreciate you guys. And I'll do a follow-up with slides the way I like to educate on this because I want you guys to visually see it. And the feedback that I got was helpful to understand where do you need more visuals and what level should I teach this stuff to you guys or share what I'm doing in my business. So with that, thank you guys. I appreciate you guys. Later, y'all.